So again, thank you for coming to my dive deeper into payment processing. And I'm going to share my screen here so that I can stay on task because this girl can talk. And I want to make sure I'm giving you the information you guys are seeking here. And so hopefully you can see my screen. Yes.
Yes, I can.
Okay, perfect. And again, feel free to let me know anytime you have questions. And if I see people or if you see people, like hopefully as I'm in this screen setting, I can see people coming in. Of course, it is what it is. So I'm just going to try to roll with
Mhm.
it. So as you probably heard, but through my presentation, did you get a chance to see that, Christy, by the way?
Yes,
Okay.
yes, I did.
So yeah, I was an office manager for decades, and that's a lot of how I learned how business owners are leaning on other industries for the logistics of business. And this is just one of those
Mhm.
many industries, right? And my industry, of
Yeah.
course, well, as many, unfortunately, lacks some scruples. But
Mhm.
again, I think there's always good people in every industry, just the same. So I'm not one to say that I'm the only one. I'm one messenger. There's many. And yeah, so I use this video because to me, I think the benefit of it specifically is how, we're always taking risks in life. And the question becomes, what risks do we have to take? And if we can take risks that are educated risks and make sure we're evaluating the consequences, I think that's huge into the benefit
Mhm.
of our own well-being and our success. And so to dive deeper into payments, the biggest thing I want to understand or make sure people understand is not all technology is actually able to accommodate all the different pricing models. And similarly, too, with
Mhm.
e-commerce, the shopping carts as well aren't always able to handle those either. However, many are able to sync to both. POS systems can be a little rigid as well as e-commerce when it comes to, for instance, specifically, it's like the surcharging, traditional surcharging. That's one of the pricing models that's the least compatible, shall we say, with any
Mhm.
others. So my partners and I, we find WooCommerce when it comes to e-commerce to be the most interchangeable, whereas Shopify definitely has more ease of scalability, but they also charge $1 or a percent per transaction if you use an outside processor. So they're definitely trying to encompass that on their own so that people don't go, search elsewhere for competition. I think with technology, one of the biggest and most important things is technology, their needs and the payment environment matter. So analyzing if the business has a storefront and what features that they need, whether it's the actual payment features or if they want like a touch screen, if they want a kitchen, the kitchen help to know about it. There's lots of different needs, obviously, in each work environment. And analyzing that is a huge factor into even trying to suggest for somebody what technology. I could not really just say that without asking a bunch of these types of questions. Specifically,
Mhm.
like a POS
Mhm.
system, how many SKUs do you have? What kind of inventory control do you have or invoicing is necessary? How many locations? Another thing too is a lot of businesses have multiple environments that their customers can buy their products or services. So, a brick and mortar can be online, a virtual terminal can want in-person payments or invoicing. And so all of these factors are hugely important to try to meet the needs and anticipate future demands. For e-commerce, the shopping cart, it's like which one fits best. We talked about that briefly, but WooCommerce is the one that can sync and is the most pliable, if you will. Of course, though, again, Shopify serves its purpose. The other thing to understand specifically is how much tech support you have so that that makes WooCommerce much easier because you can lean on your tech support to build up your website as you grow. Where again, scalability,
Mhm.
Shopify is much easier to work with. The other question becomes, is it B2B, B2C, meaning business to business or business to consumer, or is it both? And I'll touch on that
Mhm.
later, why that matters so much. The pricing models and their interest and how much that suits the owner. So in my opinion, if a business goes into another, if a business owner, excuse me, goes into another business and is really upset with cash discounting or surcharging, then of course that's not a fit for that particular business. However, because
Mhm.
again, it's your baby, right? Your business is your baby. But again, sometimes you really want to make sure you can have cash discounting, for instance. So then maybe when you're looking at technology, you make sure to prioritize that for the technology you're seeking out. At restaurants, do you take payment at the table or do you want them to come up to a register? Service providers, do you want to be on the go and accept payments on the go or at a fair so that you know you're mobile? Virtual terminals, they're amazing. They can do yearly, monthly subscriptions, yearly subscriptions, invoicing, emailing the invoices. There's a lot of ability through virtual terminals alone that pretty much can do just about anything a QuickBooks can do. Of course, not quite because QuickBooks is more of a bookkeeping system. But you know, tracking customers, creating invoices, texting invoices even possible. And then also considering if a CRM is of need. You know, not all businesses need CRMs, and yet some couldn't function without them. So all of these components are pretty big. Same thing with like a pay now button or feature on your phone or on your, excuse me, your phone, on your website, because of course that can save a lot of time. If a person can make a payment in the middle of the night or any time of day without someone actually taking the payment, that's, you know,
Mm-hmm.
you're giving them ease of payments, and then you're also making it easier for the people to accept the payments. And you know, different service options. So trying to optimize all of these things at once is sometimes interesting because sometimes it's like, can we meet all your needs? Can we not? Um, Authorize.net, for instance, if you need all your payment types, Authorize.net doesn't do ACH well. So finding the environment that fits all your needs is part of the chore when it comes to finding a technology that fits your needs, right? And to catering to your needs. So diving into gateways, I'm just going to talk about this briefly, even though I have quite a few things. I gave a lot so people could screen share if they choose to, or you
Mm-hmm.
know, take a picture. But really, it's data encryption. You know, our key function with the gateway is literally being the intermediary, just as the payment processor is between the merchant and the financial network. The financial network is literally the business's bank, the customer's bank, and the card brands, as was mentioned in my first presentation. But yeah, so they're of course got a lot of data sensitivity so that they, you know, PCI compliance is a big part of it. Tokenization is huge in regards to making sure the information is kept secure. And they've come a long way with all of these things, but yet still fraudsters are amazingly good as well and have often figured it out. Authorization, verification, making sure the funds are there, getting the funds to the person, their settlement and reporting abilities through the gateways, integration and API. Someone asked me about API as well earlier. I was hoping that they can come and hopefully they can catch this live. But when it comes to APIs, it's very specific to your environment, and it's not a one shot fits all. And so there's so many different components with this. I need to know specifically what the question is and what the environment is to dig deeper into what is workable. But yes, we have many APIs because of course different banks that we work with and partner with, and then also different gateways would then mean a different API, if that makes sense. And then you've got multiple currency, international support, risk management, and again, method of payment. Method of payment for it's amazing, even on online, it's amazing how many different methods of payment is actually common and customary now. They're just getting even better about it. But the
Yeah.
part I want to make sure people understand the most when it comes to this in this particular presentation for us is that if you're a B2B business, meaning a business selling to business, your gateway really matters. If you're a B2 consumer business, B2C, it doesn't affect you so much, the gateway. However, and of course, some are both. So then it's like, where do you weigh it out? Are you more B2B or are you more B2C? But
Mm-hmm.
similar to the interchange itself, there's classifications of levels for your card type. So the customer level one would be like a customer, you and I going to get a debit or credit card from our bank. A business is a level two, getting their debit or credit card from the bank and, you know, the owner or their users. And then level three is when there's more restrictions to this and more classifications. I'm literally trying to keep it as simple as possible for this conversation. But with level three, there's tax exempt, for instance. So there's that much more information that needs to be populated. And so when I'm using the word optimize, I literally mean populating that information. So to receive the lowest pricing on the right in a B2B environment, having a gateway that populates all the information on each transaction of that business card's data, sales tax, EIN, all of that, that's what's going to give them the lowest rate possible. If they aren't getting all of that information, the B2B business can literally get an increase of 1% or greater for each transaction. And you can imagine for the larger businesses, especially, that's going to add up a lot. So there's times when
Yeah.
literally just changing a gateway can save a business hundreds, if not thousands and thousands of dollars. Again, it's all based off of the volume that they're running, that these savings and or these money leak is actually affecting them. So
Hmm.
my partners, PayBright, Maverick, and Vivid, they are, of course, all of them have the capability of that. PayBright actually also uses NMI, but then they also have a gateway they white label, calling it the PayBright Gateway. Similarly, these companies as well do. And then I thought this was interesting when I looked up about Stripe that they actually support this, but then they have this whole logistic on making it work. And I'm not about to go into all of this. I'm like, are you kidding? I'm just copying and pasting this. But that's a lot, right? But you can see
Yes.
they're not making it easy. And at the same time, they do make it possible. So what you know and learning and asking the right questions can be really pivotal to
Hmm.
what you're getting out of them, right? And so I'm never one here to say, one is bad or another. I think every situation has a need and a good fit. And yet I
Hmm.
also think people should be very conscientious as to what they're choosing. And so the other thing I want to discuss quickly is QuickBooks integration. So a lot of people don't know this, but QuickBooks flat out is an Intuit service provider. That's who your processor is if you've not integrated elsewhere. And Intuit, again, serves its purpose. It's great for smaller businesses. However, again, the larger your business, the more it's not so great. The pricing is generally a 2.99 flat rate. I do hear that that's going to be risen, but I don't know what and when. I don't even know where it is that I hear this, but you hear things
Hmm.
right through the industry. You can also get a card reader for QuickBooks, but a lot of people don't even know that they can do this, but it does lower the rate almost 0.5%. And then
Wow.
again, most of people in these environments, they are keying in their card because they don't have the card in front of them, right? And so literally they're
Right.
typing it in, so they're getting a 3.5% rate, flat rate. And that's not a terrible rate if you've got, let's see, like if you have, if 80% of your businesses use a credit card or an American Express, that's a great rate. But
Hmm.
chances are most environments are not that. Does that make sense? And so
Yes.
if you even have half of your population or your clientele that are using a credit or debit card, or even a credit card that's 2.5% or less, this what do you call this situation and this QuickBooks itself with Intuit is not your best fit. Now, again, they're kind of like merchant aggregators. Intuit is where they delay funding sometimes. There's some payment holds, sometimes lack of support. Um, but of course, having your bookkeeping in one thing actually really does help. So again, it serves its purpose. However, you can plug into other opportunities, and there's a ton of them to choose from. And then it's a matter of which one fits you best. Do you want on the go capabilities? Are you looking for specific pricing options? And then there's lots of different levels just because of what these prices start at. Of course, each of these brands has its own, well, if you pay this, you get this. If you pay this, you get this. And that's just customary, I think, with any type of business, right? So,
Hmm.
a lot
Yeah.
of times we like charge them or bill or Genie, to be honest. Verosa can be a good one. The other thing too is just switching your gateway on the back end again through QuickBooks to lessen your B2B, your B2B, level 3 optimization. And that also tightens up your chargeback issues. And so that can be really important. You can connect to your phone and process payments and still have it connected to QuickBooks, which is, again, most people don't know that. And then there's even third-party integrations through Clover. So maybe you want kind of a POS system that connects differently than, because QuickBooks actually has some inventory, but it's not, it's not ideal for a lot of people, right? I actually used to do bookkeeping, like I
Hmm.
said, for 12 years. I actually know QuickBooks quite well. But again, so it's a matter of what you need, what you want, and and trying to find the fit that works best for you to make sure your needs are being met. Now, I wanted to just touch base quickly on PCI compliance again because it is so important. When you've got over half the population of businesses that are not PCI compliant their second year and on, you recognize
Mhm.
that the service of a lot of processors is lacking because it's really not okay to want to make 20 to 50 to whatever it is a month to not help them get this done because obviously getting it done it reduces their liability risks and them not having it done increases it. So to me, that's just a big service piece for payment processors that if they're not proactive in telling their clients, and that's part of why it's nice to have like myself or any local merchant provider that's on top of the service provider, you get an extra level of service. And because your service, whoever I'm servicing, I'm getting paid by, I'm obviously going to have some skin in the game and I'm going to care about their business's success. And so that's the other advantage of having someone that is local. But yeah, I just wanted to touch base on this quickly. So again, understanding
Okay.
interest rates here or interchange rates. I'm just talking quickly about this, but there's a lot of different interchange rates. So most common and the most transparent rating is interchange plus pricing. They call it IC plus. And the reason that that's the best is because it's literally the cost of the card plus a modest markup. Now, when you understand that a debit can be anywhere from like 0.5%, 0.05, like debits can be very small, costly. And then some of them actually can still be 1%, right? Or so forth. So they do still have a lot of range. Again, it's based off the features of your debit or credit card and also the environment that you're making your payment. Again, card present or not present. But if people understand is that it's kind of, the conversation of like, would you want to pay the same for a side of broccoli as you do for your lobster main? Of course you don't. So you don't get anything more out of paying more. Why would you ever want to pay more?
Mhm.
And so that's why to me it's super important. And then also merchant categories. Some merchants, they're high risk. And because they're high risk, the cost that come through their payment processing is higher. Whether you're, whether you have guns or whether you're selling CBD products or just something that's, uncustomary and possibly not legal
Mhm.
in every single city and state, then that's going to have more concern and it's going to have higher rates. And so that's also a factor. And no matter what pricing structure you're at, these prices have to be paid first before your processor gets any portion of it. That's part of the job of the processor is to pay the acquiring bank their interchange fees. So we talked about merchant
Okay.
aggregators before, but just briefly to talk about them before I dig deep, they have a shared merchant account with everybody. So you don't have your own bank account. You're literally like sharing a bank account with everyone under Square, everyone under Stripe, and everyone under PayPal. So what does that mean? When there's a problem with one, sometimes others are going to be affected even when they didn't do anything wrong, right? So for instance, during COVID, there were conversations about some of these providers having extensive hold times because again, there was more fraud because everybody was moving to
Mhm.
online payments and not as much physical payments, right? And so a lot of people
Right.
were like, I want my money back. How do you get your money back from the very person controlling your money and holding it? Good luck with that, right? Like I don't wish that on anybody. And so that's the thing is like the bigger you are, the more important it is that you find somebody that actually is supporting you and actually has a heart and cares for your greater good. Because this is where it really does matter that your processor cares about your interests. And I am with
Mhm.
partners, my three partners all promise no rate increases. That's actually not common. Like I know a lot of
Mhm.
businesses that actually do rate increases. In fact, even Square recently just raised their rates. I'll be showing you that shortly. And it's just a minimal amount. And they are telling you about it. But a lot of times all they have to do, contract or not, is just tell you in a merchant statement next month your rates are being raised. That seems
Right.
it seems lack of scruples. And at the same time, who says there's scruples in business? Let's be honest. I know that sounds bad, but a lot of people don't run a very honest and
Mhm.
it's just not good business. Not everybody runs a good business. And so that's the thing to understand mostly is um that concern, if you will. But again, for businesses that are doing 100, maybe under 150 a month or a year, they're not bad fits all the time. And again, a lot of it too is regards to your card environment, whether or not like if you have an industry where more than half of your customers are using really high cards with points, these fits are actually not bad, right? And even if you're doing over that, if you've got a business that's 250K a year and 75%
Mm-hmm.
of them are using, American Express, that's not a bad fit. So again, it's always about the card transactions that you're getting and being able to look at that. And the hard part is for me looking in when I'm trying to look at their merchant statements, they don't show that data because they don't have to. They literally are being fair by showing one. They don't show any card data. We don't know if they're debits or credits or anything because they don't have to show that. They bill one rate. And so that also makes it really hard for the competition, which I think they use to their advantage, right? But again, they have the right to. But there's no way
Mm-hmm.
for us to really know. We kind of have to guess, okay, well, what's your card ratio? What do what are your customers using? So
Mm-hmm.
Square, as I mentioned, they're actually increasing their percent transaction to 15 cents. Now, again, that's not very much at all. I'll be honest. But again, they're always increasing their rates. And the other person too is in person, that's a decent rate. But keep in mind, online and or manually keyed in, you're at 3.5%. That's a pretty common thing for a lot of businesses. Now, Square is typically known for the brick and mortar, and they're also great at giving like free equipment. So again, if you're just starting out, I don't harp on these guys. They definitely fill their purpose and they serve their purpose. But once a business gets big enough, I do think that it's kind of like buying a car. When you buy a brand new car, you should get full coverage
Yeah.
insurance. You should get a merchant account. Whether you use me or someone else, get a merchant account, right? Um,
Mm-hmm.
and and brick and mortars, keep in mind, they're usually paying rents and staff and everything else. So, they're almost hardly staying alive if they're not making 12 to 15K a month, or they're not even making a
Right.
profit. Stripe. Stripe is typical for a lot of businesses when it comes to the e-commerce. In fact, it's exclusive for like HubSpot, the, CRM. So a lot of
Mm-hmm.
different people are using Stripe. Kajabi is another one that Kajabi, it's a coaching platform. A lot of coaches uses. And it's specifically, you can only use Stripe or PayPal. You'd have to go to a third party to connect with them. Now you can go to the third party, but the concept of that is they're gonna make you pay for it, right? You're gonna have to pay even more, which that's oftentimes the reason you'd want to switch out of them. So, again, they definitely serve their purpose, but they definitely have their issues. And so I'm glad that we're going all over this and I appreciate your time in looking at this. PayPal is the worst when it comes to cost because it just starts right out at 349 for everybody across the board. Now, again, that's not horrible if it serves all of your purposes, right? So, you know, sometimes price isn't the most important thing. And so I'm also here to say I agree that that's not all bad. Now, of course, for like high risk, I don't know if they even support that. Plus, they also have so many customers that sometimes they can afford to lose money because they're gaining so much on the how many businesses that have debits, right? Once you
Mm-hmm.
have so much business, sometimes you have the wiggle room to take on any and every client because in the end that allows you to take on enough clients to compensate for the loss in some areas. Tiered pricing, quickly, I just want to talk about this, but they've got the three different tiers. This is very common for businesses or banks themselves. And some processors too, to be honest. The thing about tiered processing is to me, you've got your qualified, your mid-qualified, and your non-qualified. It's all about like the interchange rates. But the thing is it's kind of tricky as to know which one fits in where. So you can have a card be in one month, and then the next month they bump it up to the mid-qualified because you keep using it and they want to charge you more. So it really lacks transparency. And I honestly, there's been a couple of times I've done payment checkups or audits where people are I can't really save them money. They're getting a good fit. But more times than not, I would say 80%, maybe even 90% of the time, I can beat banks rates, probably 90% of the time. But anyway, there's a few good ones out there. Like again, I never want to trash talk, right? Traditional surcharging. Now, I actually think this is one of the most fair pricing models there is, and yet it's not legal in a couple of states, which also makes it a challenge for a lot of businesses to use it, especially businesses that have a lot of locations throughout all of the United States, because they want to make sure that they can do the same thing across the board. And so if they have a location in that state that doesn't allow it, of course they're not, they want their businesses to be synced across the board. But you're literally pushing the credit card fee to the customer. In 2004, 24, excuse me, Visa capped it to 3%. However, processors still understand we're getting cards sometimes at 3.5%, right? Especially credit cards. And so they'll charge, and I've even bid this myself, where it's like, I'm going to bid you an extra 0.5% that the business has to pay. So that, yes, it's 3.5% that we're billing for credit cards, but you get to push 3% to your customer. So therefore, you're just paying the 0.5%. What I like about this is that the customer can still pay with a debit card to avoid the fee, and the business pays that debit card fee, usually at about often 1.5%, to be honest, because again, they deserve to make a profit each transaction or they'll go out of business. But this is, this is a very cool thing. The struggle with this, though, is people do it anyway and they're not registered with the card network. So you can see these handwritten signs. The kicker with traditional surcharging to know if the business is doing it is that literally we have a line item on your receipt. And that is advantageous for twofold. Also, if you return a product that was surcharged, you get the portion of that surcharge back for the item and it's tracking it. And so that's kind of the thing that I do like the most about that. And so let's see, I want to make sure if I go over, I'm just going to tell you to join this again. But then we've got cash discounting and dual pricing.
Okay.
That's where you've got both the opportunities with cash discounting, you're upping the charge of everything. But then if someone, when they check out, pays cash, they get a discount. So this one's actually super cool for a lot of businesses because if you're paying $20,000 in processing fees and you switch to this, you can literally save $20,000 a year. Like that's hard to turn down, right? Of course, some customers are upset about it, right? They don't want to pay the fee. But let's be honest,
Yeah.
if you're going to a business and they're not profiting, they're not going to stay there to be able to make the burger or to serve you whatever it is that they're servicing you and whatever product they're selling you. Like they have to make a profit. That's the whole point of business.
Yes.
Dual pricing, same thing. It's just handled differently where you've got two distinct price tags. Pricing models. So we've got flat rate pricing, which I mentioned. And even I sometimes, there's times where flat rate pricing makes sense. Like I have a sandwich shop that I was going to suggest that we do flat rate pricing because they want the exact fee pulled out of their account every day. And if they do interchange, they're going to have to get it all at the end of the month because there's no way we can identify what their fee is as it's being pulled out day by day by day. And so there's times when, again, that's not always a bad fit. Interchange pricing plus, I highly suggest. Surcharge or tiered pricing, I don't suggest. Surcharging, it's a fit for some and some it's not. Same thing with the dual pricing and cash discounting. Now, I mentioned a bit about merchant statements. Now, merchant statements, the thing with them is you got to look at them. And if you don't look at them, how can you know whether you're being serviced well or not? There's a lot of information on them. I can't tell you how many times people don't know where to find them and they're not checking it out. And so, and because you've got unscrupulous providers that are padding the interchange rate, you can't know unless you have a professional audit them because a person looking at them is never going to know if the interchange fee is correct. They do make these complicated, so I highly suggest looking at them. I highly suggest against contracts. So I really am not going to talk about this much, but the two things I want to make sure people know is most contracts, the processor can still rate creep. So a lot of people think that they're getting a good rate and that's why they want a contract, but that doesn't mean that. Sometimes people maybe can get a specific person to service them, but it's my opinion, and it's a very strong opinion, that a business person, anyone should be earning their business month after month. And so, and that way they keep doing that, like why would
Yes.
you go to someone that isn't doing that? So that's my opinion. So I'm going to stick by that. Switching processors is often super simple. You can use your same setup a lot of times, whether it's online or POS. They use basically what's called a VAR sheet, which contains your information about who your merchant provider is and where the money goes. That's also sometimes referred to as a tear sheet and a parameter sheet. But the one thing people don't understand is because we're a bona fide, this is a financial application. And so there are credit checks, although we can do workarounds with your business's financial, but it is a financial application. The business owner, usually 25% or plus, needs to authorize everything and needs to be accountable for the account. Consider if there's chargebacks and there's no money in the account. Someone has to be responsible. So the processor always puts somebody on the line for that, and it makes sense why. So we do look for driver's license, voided business check, or a bank letter to verify that the account is an account, a substantial account. And also, understanding the transaction history can be helpful. So we like merchant statements, but that's not always required. And then understanding your transaction data, like your single high transaction and how often that will happen, that can reduce your hold times. And so that's often very helpful. And then, knowing your volume, of course, just like anything, volume is leverage. So the more money you're processing, the more leverage you have to get a better rate. But when you're volatile or when you're high risk and things like that, of course, that can be challenging for a processor to give you that high rate at the top until they understand what they're getting into, right? Because again, chargebacks can be super expensive for businesses and for processors specifically. So that's kind of the end of it when it comes to this. Now, as you can see, back to me gambling with my family. My mom's Italian, so whenever my family gets together, we gamble. But the beautiful part about gambling with family is if you lose, you know your family's winning the money. And I know what risks I'm taking every time I do. So this is why I
Hmm.
think it's highly important that we're careful with what risks we take and that we take conscientious risks to make sure that we're analyzing and weighing out our positives and our negatives, if you will, in order to, um, in order to proceed. Now, lastly, just quickly, I want to make sure you do know I'm actually an affiliate for multiple different companies. One of them, in fact, if you'll take a picture of this, if you have a chance or if you care to, and if not, that's okay too. But one of
Hmm.
the companies that I have just started learning about is called Talk Fusion. And it actually is all about video email and video branding. And it allows you to have access to create templates of like 1,000 different templates for personal, business, charity. I'm glad I have your business. It could be happy birthday, it could be condolences. But imagine how much greater your branding and your message is if it's personally received. And so I really think
Yeah.
the business is going to like go crazy. And the beautiful part of it is you can join the business and be an affiliate for as little as $150 down and $20 a month. And then there's two other options as well. So I highly suggest you checking that out. And then the other one is called Nilo Life. And it's all about improving your quality of life with your health, your wellness, and your happiness. Because again, if we just worked and we had no play, that's a terrible life, right? We all deserve a vacation. We all deserve to have high quality experiences. And of
Hmm.
course, your health, same thing. If your health isn't good, I don't know how happy anyone can be when you feel like crap, right? Like nobody really feels great. So there's procognition, lion's mane mushroom melts. There's a product called Stellamere that's all about pretty much anti-aging. It's for your stem cell health, your telomere health, and your R antioxidant response element. Now, a lot of people don't know what your telomeres are. That's actually your end caps to your chromosomes. And
Hmm.
there's in 2009, they actually learned about this and got a Nobel Peace Prize, whoever discovered it. But the healthier your telomeres are as you're aging, like say you're 80 and your telomeres are healthy, those people always have healthy telomeres. The people that are they feel like their bodies are falling apart and they're 50, when they look at their telomeres, they can see that they're deteriorating. So this product literally reformulates and grows your telomeres. So think about like your car. You're not just going to check your transmission fluid. You're going to check your radiator fluid, all your fluids, because they all matter. It's kind of the same thing with all three of those to synergistically benefit them all. It's better to get a product that actually does just that. So that product does that. And then there's wholesale travel stays with the membership, but you can do a two-part to the membership. You can just become, it's month to month. You can just become a member for the health products for $10 a month or 100 a year, or you can do the $59 a month and it's 637 for the year. You get a 10% discount. But the beauty of it
Hmm.
is the business itself is only $20 for the first year and $40 each year after that. So I don't know of any business that's so inexpensive. And until April, the Nilo Life, you can actually still become a founder. And so you can go through this link again, and you can tour Nilo and you can check out how all of our hotels and things really are cheaper than hotels.com. If you think about it this way, hotels.com, Travelocity, all the places that get aggregate wholesale travel stays, all of them have to up
Hmm.
their prices just to sell it to us. So imagine if you didn't have to do that. Here, I'm going to stop my share. But imagine if you didn't have to do that, where because we have a membership this month to month, the wholesale travel is always the best price no matter what. And that's exactly what that ends up being. And so I love that. And so to close, thank you very much for coming and thank you for allowing me to take your time. And I'm going to close this recording for now, but I'm also going to tell you that I have a book for you because you did show up live and I was going to do a drawing. So just one moment and I'll tell you more.